Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's update our review on the gold market. So you can see here the situation is changing, and market actually was not able to complete the grabber, although it has tried to do this, and dropped down. So in the current situation, although by letter we do not have clear double repo sell, but by the nature this is double repo sell pattern. So we have the first close below the 3x3. Market hasn't reached the fib level. Here we do not have the close above, but by the nature of this performance, market has tried to pass through it, and grabber is confirming that, but fails. And here, as you can see, the collapse of the bull. So market is dropping, taking out of these lows, erasing the grabber and acceleration down. So usually the target of the double repo stands somewhere in 50% of the whole thrusting action. It supposedly should be around 19 or 6 area. Maybe the confluence area will be the target. But in general, this is a bearish background, and currently, by the recent price behavior, it has erased the short-term bullish context that we discussed in the weekly report. Not just because of the grabber, and if even we have some doubts that this is really double repo, we could take a look on the intraday charts. On the 4-time frame chart, you could see what's going on with our free drive. So this is not natural performance for the bullish market. It has erased and just breaking the pattern in the middle way, and this is not normal. It means that the bear is taking control, and this really rough breaking, crude breaking of the pattern that stands in the progress, it's well, stronger sign than at some reversal at some points of the completion of the pattern. It means that pattern is broken at the halfway, and it usually suggests that behind of this downward action stands more or less significant bearish activity. So market taking out of these lows. Now we can't talk about the potential butterfly. So the ability to form the butterfly is already lost for the gold market here, and we could get some downside acceleration. So it means that on the hourly chart, let's take a look. It seems that market, despite that it has tried to break the hand and shoulders, but it was not completed, and market returned back down to the downward action. Now it hits the OP. In fact, here we have different A points. I used the conservative when the downside action starts, but if you use this area as A point, you could see that OP stands around 1964. By this A point, market is already flirting with the OP. So here we could watch for some pullback. In the current circumstances, hardly this pullback will be too strong, just because downside action just has started. On the 4-time frame, on the daily chart, market is not at the support, so here is nothing holds price from the further downward action except this extension. It means that the target, the pullback that we could consider will be very small, so supposedly somewhere to the 1975, maybe at the best maybe 1980. So this confluence area, these two levels that you could keep watching if you would like to go short. Finally, recall what we said about these lows on the spot. That was our ABCD pattern. Market hits the OP with acceleration. We said it should keep going to the XOP that stands slightly above this area. But here was just minor pullback, and market just dropped below these lows, breaking this ABCD performance, breaking this ABCD pattern, showing reversal swing, which is actually clearly the bearish sign. So that's the analysis of the intraday chart confirms the validity of the double repo sell that we have here, although it's not perfect. We do not have slightly here the close above the 3x3, so we could call this double repo lookalike pattern. But with this thrusting action, is overall mechanics of the price in this area tells that probably this is it. So it means that in the current situation, we're not considering taking new longs by far, watching what will happen to this double repo and where it will stop. Besides, if you'll take a look at the other markets, particularly speaking on hand and shoulders, you could see that here's the 10-year yield could show the pullback, and it's forming the right arm probably. And the rising of the yield also will support the deeper retracement on the gold market, this pullback if it will happen. So that's what we have currently on the gold. So if you would like to take part with this journey with this double repo pattern, you could try to. In general, we just discussed all the necessary background that you could use for position taking. If you do not like this and you are watching chances to go long, in this case it would be better to wait a bit and see what will happen while this retracement will stop. Because by itself, double repo pattern is rather strong and fast, and it could just lead to significant action if it will really start to work. And from that standpoint, it would be better to not go against it right now and see what will happen.